Welcome back everyone, and in this video, we're discussing the newest SPAC that billionaire venture capitalist Chamath Palihapitiya is taking public. He is leading the $250 million investment into the residential solar company Sunlight Financial. This is a financial tech company with a focus on clean and renewable energy. And what they do is provide affordable solar loans to homeowners in the United States and also provide solar contractors with a point of sale financing platform to gain greater customer exposure. And right now, Mr. Palihapitiya believes they are the leading residential point of sale financing platform helping drive the shift to clean energy. And the entire clean energy sector is only set to expand for decades in the future. So in this video, we're going to break down Mr. Palihapitiya's newest SPAC, go over the potential for this stock to go 5 or 10x in a matter of years, and discuss as a whole the future of this business, taking a look at their investor presentation and some future estimates for the long-term growth of the entire solar sector. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, or any major market news. So please hit that like button, subscribe for daily videos, follow along with my investing journey, and today we're going to focus on the most well-known billionaire venture capitalist Chamath Palihapitiya and his newest investment in Sunlight Financial. And this is the company making it simpler and more affordable than ever before to upgrade your home. And let's take a look at how this will work in real time. A homeowner can buy a residential solar technology set from a contractor. The contractor would then use Sunlight to approve the financing and the homeowner's credit. Sunlight will originate the loan and sell the loan to a bank. And to date, up to this point, Sunlight has funded over $3.5 billion of loans through its proprietary platform. And we're still very early on in the adaptation of solar energy. The total addressable market is going to be estimated at over $11 billion. And at this point in time, we've only penetrated 3% of the total market, leaving many years of growth up ahead. And once the merger takes place, approximately 19% of the company will be owned by the PIPE investors. And taking a look, Sunlight Financial is merging with ticker SPRQ, which is Spartan Acquisition Corp 2. So this is another SPAC that was trading in the $10 range before the merger was announced. But once we got the news, we saw this company climb up just around 30% and reach a high of over $14. But from that point, we have seen a little bit of a downward trend. From that high of over 14, the company currently trades above 12 and is down around 11%. And this is a SPAC that I may personally invest in for my high risk, high reward SPAC and small cap portfolio. I think the company has a lot of potential, and we're going to outline that growth going forward by taking a look at their investor presentation and some analyst predictions. And the first point that I want to share is the growth of the overall solar sector, which is expected to be at an over 17% CAGR for the next 5 years in the future. And with the new presidential administration, who has a focus on clean energy infrastructure with a plan to spend over $2 trillion, the solar industry is likely to see a mass expansion over the next 4 to 5 years in the future. And now, if we jump over to the investor presentation, we can learn more about Sunlight and the growth of this company for many years in the future. So at this current point in time, they're estimating that the annual total addressable market in this solar space will be at over $11 billion. And the CAGR for the loan growth is expected to be at 31%. And for the full fiscal year of 2021, they're estimating over $60 million of adjusted EBITDA, with a steady state margin of over 55%. And this company is driven by 3 core factors. That is the contractors, the consumers, and the capital providers. And if we quickly discuss the importance of all 3, we're going to take a look at the contractors first. And these are the individuals and the companies who are physically installing and supplying the solar panels on the homeowners' roofs. And these companies use Sunlight as their point of sale service to give credit options for their potential customers. And essentially, this really opens up their potential market base away from the top 1% of earners, who are usually the people who can afford the high upfront cost of solar panel installation. But because of Sunlight Financial, these contractors can now expand their customer base and offer low-cost and affordable financing options to get solar panels installed on many more people's homes all across the country. And right now, consumers are using this as a simple way to finance and save money and transition to clean and effective energy. And Sunlight as a whole sells these loans to the large capital providers who are looking for strong, high-quality loans for their portfolios. So as a whole, the entire Sunlight Financial business is driven around the contractors, the consumers of course, and also the capital providers. And this company is well positioned in a market that is trending in the right direction. Over the past 5 years, the cost of solar continues to decline at a rate of over 9% per year, making it more attractive and affordable for the everyday homeowner to install solar panels on their roofs. And as the price and cost of solar continues to climb down, the cost of electricity for the average home in America only continues to rise. So as solar costs go down, electricity prices go up, it only is getting more attractive to make that transition to a clean and renewable source of energy. And this transition is actually estimated to save the average homeowner over $25,000 over the lifetime of the service. And once the loan payment is actually paid off, you're going to see a massive increase in savings each and every month. And more states all across the country continue to expand as time goes on, and the capacity for solar is only picking up at a massive rate. And each and every year, the US residential solar market continues to grow in size. And one thing that's very important is that back in 2017, only 42% of residential solar installations were financed with a loan. But now as time goes on, more and more people are taking finance options, and that now sits at 63% for the full year of 2020. So this company, who is backed by the loans and the financing options for solar installation, is only seeing mass expansion in their potential market, which is a great sign. And year over year, the total loan CAGR is at 31% overall, which is incredible for this young fintech name. And going forward, as the company reaches greater scale, we're expecting mass expansion in their operating margins. And we can see year over year, they're becoming more efficient and reducing the fixed cost per unit. And by 2023, their fixed costs are going to be less than 50% of where they were back in 2018. The variable costs per unit are also on a downward trajectory, and their adjusted EBITDA margin only continues to climb each and every year. In a 3-year span, we're expecting to reach over 56%. And if we take a look at this young company's financials, we can see that they continue to grow at a nice rate year over year. Total revenue for 2017 was just around 18 million, then up to 33, 2019 up to 52, and for the full year of 2020, they're predicting just under 70 million of total revenue. And going forward, that's going to continue to grow, and by 2023, we're predicting around 200 million of total revenue for this young solar fintech name, and I absolutely believe that is very achievable. I think they're not overestimating their predictions. I think these are fair estimates and actually achievable, and hopefully they can surpass these levels and become a much larger business in the next 3 to 5 year span. And taking a look at the company's net income and their profitability, back in 2017 and 2018, they did post a minor accounting net loss. But in 2019 and 2020, they were both profitable, and each and every year, that net income is expected to grow. And as a whole, this is a very high margin business. By 2023, with around 200 million of total revenue, we're expecting this company to post 75 million of total income. That's incredible. For a young company that is still early on in the growth stage, to have such high margins that are only going to continue to grow at future scale is a very important feat for this fintech name. And if we take a look at their future cash flow bridge, we can see each and every year, free cash flow is expected to grow. And by 2023, they're predicting over 77 million of total free cash flow. And I think that's an incredible number. With a lot of young SPACs, the risk is that they become cash poor. They don't have enough money to continue to fund the business and are always seeking new debt and new equity offerings. But with a company like Sunlight Financial, I think that won't be a problem. They have high margins, very profitable already in 2020, and going forward, these massive free cash flow estimates I believe are only going to allow the company drive further at a very fast rate. And overall, I personally believe that the solar market is only going to expand at a high double-digit rate for decades in the future. And I can personally see solar being a main way of power generation that powers cities all across the globe. And I think this new young company is definitely worth taking a look at. This is not financial advice at all. I am not a financial advisor. Really, all we did today was go through their investor presentation that is available on the internet for everyone to see. And the fact that Chamath Palihapitiya is the leader and key investor into this company only drives my confidence, and I am actually considering starting a position in this young name for my small, high-risk portfolio. And I like Chamath. I think he invests in solid companies, and he has a great track record of success with these young SPACs. And already in my portfolio, I own Open Door Technologies and Virgin Galactic, which were two of his previous SPAC mergers, which have turned out very well. Virgin Galactic is up 94% in this portfolio, and Open Door is up just under 10% in the short time that I've owned this company. So I already own two of Chamath's previous SPACs, and this may be the third that enters in to this young portfolio because I do believe in him. I think he's a great VC. I think he has a great vision for the future, and as a whole, this is an investor that I actually believe can be one of the wealthiest people in the world and has a key idea and key vision for a cleaner and more sustainable planet. So I think as a whole, Chamath is a great businessman. Hopefully this is a key success. Thanks for watching, everyone. I am the Gen Z Investor, and today we just did a quick little overview on one of Chamath's newest stocks that may see some mass expansion over the next few years. So please hit that like button, subscribe to the channel, and see you in tomorrow's episode.